Last time I showed you the most common overhead mistake costing dental practices thousands a year. Today, we're going into a different kind of savings entirely on the tax side. If you're a dentist who owns your own dental practice, there's a good chance someone has told you to set up an S-Corp. Maybe your accountant mentioned it, maybe you read about it online, maybe another dentist at a CE weekend brought it up. But here's a question almost nobody actually answers clearly. How much does it save, and is it always the right move? I'm Kanan, a CPA, and today I'm going to break this down in plain English with real numbers. No jargon, no vague advice, so you can walk away knowing exactly where you stand. Before we get into the numbers, let's clear up the single most common confusion I see. A PLLC and an S-Corp are not the same type of thing. They're two different decisions. A PLLC is a legal structure. It determines how your business is organized, who owns it, and how liability works. An S-Corp is a tax election. It determines how the IRS taxes your income. Here's what that means in practice. You can be a PLLC that's taxed as an S-Corp. In fact, that's the most common setup for dental practice owners in California. So when someone says, should I be an S-Corp or a PLLC, what they're usually really asking is, should I make the S-Corp tax election on my existing PLLC? And that's the question we're going to answer today. Most dentists who set up a PLLC without making any additional tax election end up taxed as a sole proprietor by default. That means every dollar of net income the practice earns flows through to your personal tax return, and all of it is subject to self-employment tax on top of regular income tax. Self-employment tax is 15.3% on the first $184,500 of earnings in 2026, and then 2.9% on anything above that. For a dentist earning $350,000 in net practice income, that's roughly $33,000 in self-employment taxes alone, on top of everything you owe in federal and state income tax. Where the S-Corp election changes the math. When you elect S-Corp taxation, you're required to pay yourself a reasonable W-2 salary for the work you do as a dentist in the practice. That salary is subject to payroll taxes, the same FICA taxes as any employee. But here's the key. Any net income above that salary can be taken as an S-Corp distribution. And distributions are not subject to self-employment or payroll tax. So instead of paying payroll tax on 100% of your net income, you only pay it on your salary. The gap between what you would have paid and what you actually pay is your tax savings. Let's put real numbers to this. Say your practice generates $400,000 in net income. Under the default PLLC setup, you'd owe self-employment tax on all of that, roughly $34,480, depending on the year's wage base. With an S-Corp election and a reasonable salary of $160,000, which is defensible for a general dentist based on ADA compensation data, you'd pay payroll taxes on $160,000, which comes to about $24,480. The remaining $240,000 comes out as a distribution with no payroll tax attached. Your estimated annual savings are close to $10,000 every year for making one tax election. Now here's what the online articles usually leave out. The S-Corp election comes with real costs. You'll need to run actual payroll, typically $500 to $2,000 a year with a payroll service. Your accounting and tax preparation becomes more complex, which often adds $1,000 to $3,000 to your annual CPA bill. And in California specifically, an S-Corp pays an $800 minimum franchise tax to the state every year, regardless of income. When you add those costs up, you're typically looking at $2,500 to $6,000 in additional overhead per year. That still leaves meaningful net savings, but it means the S-Corp election starts making strong financial sense around $80,000 to $100,000 annual net practice income, not before. If you practice in California, which many of you watching this video do, there is an important wrinkle. California does not fully recognize the S-Corp tax treatment for state income tax purposes. You still owe California income tax on your full share of S-Corp net income, which reduces the state level benefit. The federal tax savings still apply fully, and federal rates are typically higher, so that's where more of the real money is. But this is exactly why one-size-fits-all answer doesn't work. A dentist in Texas with no state income tax gets a different result than a dentist in California. The structure needs to be modeled for your specific situation, not copied from what another dentist told you worked for them. To be balanced about this, the S-Corp election is not always the right answer. If your net practice income is under roughly $80,000, the admin costs can eat up most or all of the tax savings. If you're in your first year or two and income is unpredictable, running payroll for a salary you can't yet sustain creates cash flow problems. So if you're planning to sell the practice or restructure within a few years, the election can complicate the transaction. And if you have significant deductions or losses already sheltering income, the self-employment tax burden may already be lower than you think. This is exactly the kind of analysis that needs actual numbers, your numbers, not a general rule. So here's where this leaves you. 3 questions worth answering right now. First, what is your actual net practice income? After overhead and expenses, the number that actually flows to you. Second, what is your current entity structure? And has anyone revisited it since you first set up your practice? And third, has anyone actually modeled this with your specific numbers and your specific state tax situation, not a generic example? If the answer to any of those is I'm not sure, that's the conversation we should have. Because the difference between the right structure and the wrong one isn't abstract. It's often $10,000 to $20,000 a year in taxes you either pay or don't. I offer a free, no-obligation practice financial review for local dental practices. We'll look at your current structure, your net income, and model what an S-Corp election would actually save you, with your numbers in your state accounting for the real costs. No vague answer, real math. I work alongside your existing accountant. This isn't about replacing anyone. It's about making sure the structure you're in is actually working for you, not against you. If today's video raised questions you haven't had answered yet, reach out. Thanks for giving me your valuable time. You're one step closer to a financially healthy practice. I'm Kanan. Let's talk soon.